A Chinese billionaire just placed a massive $300 million bet that silver prices are going to crash. It is the single largest short bet currently sitting on the Shanghai exchange. He is betting the house that silver is going down, but he just walked into a trap. While he is betting on the price dropping, the Trump administration just gathered 54 nations to make sure prices go up. This isn't just a trade anymore. It is a financial war. And if you hold silver or if you're thinking about buying, you are standing right in the crossfire. Let's look at the first player in this war. There is a low-profile trader in China named Banning. He isn't some amateur. He made nearly $3 billion by making bullish bets on gold, but now he has flipped. He has turned his sights on silver. He recently placed a massive short position totaling roughly 450 tons of metal. That is about 30,000 contracts. In plain English, he is betting his fortune that silver becomes worthless. And for a moment, it looked like he was right. Silver dropped 16% recently. On paper, his account is up, he is winning. But paper gains aren't real money until you cash out. And that is where the second player comes in. While this billionaire was building his short position, the White House was making a countermove. J.D. Vance and Marco Rubio just hosted a massive summit. They brought 54 countries to the table to talk about critical minerals. Now, politicians love using fancy words to sound smart. When they say critical minerals, understand that this is often code for physical silver. Why? Because you can't build missiles, you can't build computer chips, and you can't build solar panels without it. President Trump is not going to allow China to corner the silver market. It's a national security issue. Here is the problem they are trying to fix. The world is running out of silver. We have a structural deficit. That means we use more silver every year than we actually dig out of the ground. There are only 3 ways to fix a deficit like that. 1, you find more silver, which takes years. 2, you stop using it, which destroys the tech industry. Or 3, the price goes up. The price has to go up. It's basic economics. If the price is high, miners have a reason to dig. If the price is low, they go broke. The Trump administration knows this. They know that cheap silver destroys American supply chains and helps China. So they effectively fired 3 economic weapons at China at once. The goal is simple: break the short sellers to save the supply chain. Right now, the price of silver is acting very strangely. It's disconnected from reality. In the West, the spot price is around $70, but in Shanghai, it's 81. The futures are nearly 99. That is an $11 premium. That is a massive gap. It means people in China are willing to pay way more for the real thing than the paper market says it is worth. Now, before we go further, I have had a lot of messages asking about the charts. I warned you about that $87 to $90 zone. We saw the price get rejected there 3 times. It pulled back to 71. If you are a trader and you want me to break down these technicals in detail in future videos, let me know in the comments. But I want to be clear. If you are a long-term investor, or if you stack physical bars and coins, this price drop is just noise. It doesn't matter. However, if you are trading paper contracts, listen to me closely. If you are over-leveraged and you don't have a plan, these markets will eat you alive. Everything is dumping right now. Stocks, crypto, metals, it is volatile. You need a strategy. But let's look at what the US government is actually saying. At that meeting with the 54 countries, J.D. Vance made a crucial point. He said that even though everyone focuses on digital tech and AI, real physical commodities are still the foundation of the world. He noted that the room represented 2/3 of the global GDP. He admitted that the current markets are failing. They are failing to create secure supply chains because the prices are artificially suppressed. When the vice president says markets are failing due to suppressed prices, that is a huge signal. It is an official acknowledgement at the highest level. They know the price is fake, they know it is being manipulated, and they are saying they need to intervene to fix it. So, we have the political reality. Now, let's talk about the physical reality, because out in the real world, silver is vanishing. Look at Citigold. They are a major bullion dealer in Australia. They just halted silver sales. They didn't stop because they wanted to take a break. They stopped because there is a global silver shortage. They literally cannot get the metal to sell to you. This isn't a demand spike. It is a supply collapse. Then look at India. The MCX exchange just hiked margin requirements on silver by 7%. Exchanges do not raise margins when they are comfortable. They do it when they are scared. Raising margins is like a casino telling you that you have to put more chips on the table just to keep playing. They are trying to force people out of the trade because the system is under stress. If gold were the problem, they would have raised margins on gold. But they didn't. They targeted silver. The market is telling you what it fears. And the biggest warning sign of all is something called backwardation. This is technical. So I will keep it simple. Usually, silver costs more in the future than it does today because you have to pay to store it. That is normal. But right now, it costs nearly 80 cents more to buy silver today than to buy it 3 months from now. That is backwardation. That rarely happens. It means buyers are desperate. They are screaming, "I don't care about the price. Give me the metal right now." It signals a massive physical drought. And this is all happening while the rest of the financial world is melting down. Crypto has lost trillions. Bitcoin is dropping. US stocks are falling. Everything is red. But silver isn't dropping because nobody wants it. It's dropping because a whale in China is betting against it, while the physical market is desperate for supply. This is a collision course. But the silver market isn't just fighting a billionaire in Shanghai. It is fighting a global economic meltdown. Look at the data coming out of the United States. It is ugly. We just got the labor numbers. They are terrible. Initial jobless claims just jumped to 231,000. They were expecting 212. That is a big miss. But the scary part isn't just the layoffs. It is the hiring. Companies have stopped hiring. We are seeing the highest number of job cuts since 2009. Think about that. We are back to 2009 levels of fear in the job market. When layoffs go up and hiring goes down at the same time, that is the ultimate leading indicator. It is the check engine light for the entire economy. And right now, that light is flashing red. The markets are starting to price this in. Look at the US dollar. It is dumping. It is falling at the fastest pace we have seen since 1980. Just 1 year ago, the dollar was the king of the hill. It was the strongest currency in the room. Now it is the second worst performing currency in the entire developed world. Currencies like the Australian dollar and the Swedish krona are crushing it. Why is the dollar dying? 2 reasons: politics and debt. The world is looking at the U.S. trade policy, the tariffs, and the unpredictable decisions, and they are getting nervous. They are pulling their money out of America. It is what we call a sell America trade. Global investors are reducing their exposure to the U.S. And then there is the debt. The government continues to spend money it does not have. The deficit is exploding. Historically, when a country prints this much money, its currency becomes worthless. The world knows this. That is why countries are slowly walking away from the dollar. They are moving into safe assets. They are moving into gold and silver. This brings us back to China. They are making moves that should scare the Federal Reserve. Treasury Secretary Basant just confirmed something massive. He acknowledged reports that China is developing a new digital currency. But this isn't like Bitcoin, and it isn't paper money. Rumor has it that this currency is backed by physical commodities, specifically gold. They want to use this for international payments instead of the dollar. Look at their actions. Actions speak louder than words. China has sold off over $600 billion of U.S. debt since 2013. They are dumping treasuries. At the same time, they have doubled their gold reserves. They are selling paper promises from the U.S. government and buying hard assets. So you have to ask yourself a question. If physical demand is so high, and if nations are buying metal to back their currencies, why is everything crashing? Stocks are down, crypto is down, metals are down. That does not happen in a free market. In a real market, when one thing goes down, money flows into something else. When everything crashes at once, that is not natural. That is manipulation. We are watching a coordinated smash. The banks and the hedge funds are shorting gold and silver to drive the price down, even though the world is running out of metal. But here is the secret they don't want you to see. This crash was timed perfectly. It happened right before that critical meeting with J.D. Vance and the 54 nations. Do you think that was an accident? It wasn't. We are witnessing a worldwide reset in critical minerals. The meeting hosted by Vance and Rubio wasn't just a photo op. It wasn't just a dinner party. It was a strategy session to reset the market from discovery to production. The big banks smashed the paper price of silver right before this meeting to shake out the weak hands. They wanted to lower the price before the government stepped in to raise it. This is the war. On one side, you have the Chinese billionaire Bunning. He has $300 million betting that silver goes to zero. He is betting on the crash. On the other side, you have the Trump administration. They are establishing a price floor. They are restructuring the entire global market. When you see the price drop, you might feel fear. That is normal. But you have to zoom out. This is a classic bear trap. When sentiment gets too bullish, the big players force a crash to reset the board. We have seen this happen repeatedly since 2022. The price dumps, everyone gets scared, they sell, and then the trend resumes upward. We are seeing a massive divergence. This is the most important concept you need to understand right now. Paper prices are collapsing, but physical scarcity is intensifying. So let's summarize the battlefield. Here are the 3 things you need to know right now. Number 1, a Chinese whale is shorting silver. He is betting big, but the Trump administration has fired back. J.D. Vance told 54 countries that the manipulation is ending. He said prices need to be predictable. He said supply chains need to be independent. They are effectively building a wall around the silver market to keep China out, and the only way to do that is with higher prices. Number 2, the physical shortage is getting worse. While the chart goes down, the metal is disappearing. Dealers in Australia are stopping sales. India is raising margin requirements because they are terrified of a default. We have backwardation, which means people are paying a premium to get metal. Now everything is crashing, crypto, stocks, the dollar, but physical silver is the one thing you actually can't find. Number 3, the crash was planned. The smash in prices was timed exactly before the 54-nation ministerial meeting. This is a reset. The U.S. government is preparing to take control of the critical minerals market. They are moving to cut off Chinese access and secure the domestic supply. The billionaire is betting on the paper market. The U.S. government is betting on the physical market. One of them is going to lose everything. And judging by the history of supply and demand, betting against a shortage is a dangerous game. Official U.S. policy states that the manipulation is ending, but the market doesn't move in a straight line. The sentiment just got too bullish. Everyone was standing on one side of the boat. The leverage was extreme. That is why the Chinese billionaire struck. He saw an opening. He saw that traders were overextended, so he pushed them off the cliff. He saw a short opportunity because the market was vulnerable. Right now, the markets are deeply oversold. It feels terrible. But you need to listen to the veterans. Gary Savage is looking at this and calling it temporary. He says this is just like every other correction we have seen since 2022. It stings, but it clears the deck. The next rally is usually much bigger because the weak hands are gone. Brian London is saying the same thing. He looks at mining stocks and sees a fortune waiting to be made. But the short-term pain is real. Positions are unwinding. People are getting margin called. So here's the unresolved tension. Here's the $300 million question. Does Banning get squeezed? Does his massive short position get blown up when the Trump price floor kicks in? Or does the deleveraging continue? Does the price have to go lower before the structural forces take over? The signals are mixed. Exchanges are raising margins to force people out. That usually means more selling. But at the same time, J.D. Vance is standing on a stage with 54 countries saying the game is rigged and must be fixed. He is promising price floors. He is coordinating a global reset. Physical dealers have no silver to sell. The backwardation is at 80 cents, screaming that the market is broken. Who wins this war? Is it the Chinese billionaire with his $300 million in paper contracts? Or is it the Trump administration with its physical restructuring and the global shortage? The paper market says sell. The physical market says buy. The timeline is the only thing that matters. This determines if we test lower levels or if this is the absolute bottom before the policy changes everything. You need to do your due diligence. You need to understand the risks. Sentiment hit an extreme and now it is snapping back. But the physical shortage is not going away. Know your time frame. If you are trading fast, be careful. If you are holding long, look at the fundamentals. Invest with logic, not hype. Use your own brain. Don't follow the herd. But there is one specific detail about this 54-nation meeting that nobody is talking about. JD Vance didn't just talk about a price floor. There are rumors of a specific price target they need to hit to make American mining viable again. If they hit this number, the short sellers don't just lose money, they get wiped out completely. I broke down exactly what that price target is and the secret mechanism they plan to use to get there in this video. Click right here to see the end game.